Welcome back to the Brent Bruce Daily for September the 11th, 2022. Hope you had a good weekend. Obviously, the bond markets were not opened yesterday, so you did not hear from me. It's 3:26 p.m. Central Time. Tomorrow is a big day. We talked about that, I believe it was on Friday, that this week we were going to be coming up against a 10-year Treasury note auction. We're going to be coming up against the notes from the Federal Reserve on their last meeting. And the big one is the CPI report that is going to be coming out tomorrow. So again, we are expecting that the CPI report is going to come in with higher inflation than the September numbers of 2021, which means that the annual inflation numbers according to the CPI are going to be higher, which means like inflation is going up, and home loan interest rates do not like that. So let's take a look quickly at our charts here. Right now, we're down 31 basis points on the mortgage-backed security. We're down 3 on the 10-year, which is good news because you can see we really came up against that 4% that we do not want to be at. We're down, like we said, 31 points on the mortgage-backed security. So we have really had a slide down. And remember, this is not good. We do not want to go down on our MBS that we're watching. So we're going to probably, hopefully turn around tomorrow. I hope we don't have to bounce off of this Fibonacci level before we turn around. But again, we're not really expecting good numbers to come out in the CPI in comparison to 2021. And that's the big thing that we're going to be looking at. So where are we right now in the mortgage-backed security on the interest rate for the Brent Bruce Daily? Let's take a quick look here. This one here. All right. Now, remember that when you are coming up against days like this, where there's a big report coming out the following day, banks tend to hedge their bets. So they kind of push up the interest rates or make it a little bit more expensive just in case the numbers come out in a way that interest rates are pushed higher. They've gotten in front of that a little bit. Right now, we're at 6.875%. So the same as we have been at recently with a little bit of a credit here. So that kind of makes me think maybe the banks are anticipating a better report than maybe some are expecting, maybe than I'm expecting. Right now, if you were to pay a point, you're probably looking at about 6.49, the same as Friday. So basically, numbers are looking about the same as Friday. Let's open up the Brent Bruce Daily here to see the scenario, the profile of the scenario for compliance purposes. And basically, what we want to know is that tomorrow's CPI report is pivotal in whether we're going to finally have the turnaround to the home loan interest rate increases that we've been having through the last 6 to 8 months. So this might be where we bounce off of our final ceiling and start to truly come back down, because inflation should subside according to the consumer price index in the coming reports, in the October report, the November report, the December report, since we're replacing higher numbers from the previous year. So what you really need to know is tomorrow the CPI report is coming out. Unfortunately, I think inflation is going to show to be increasing, but I think the markets are anticipating that. So maybe we won't see a big increase in home loan interest rates. And if we don't see an increase in rates, that's going to be tremendously helpful, because I think that we're going to see reports coming out in the future that are going to help rates go down. I will keep you posted. Make sure that you like, subscribe, and share, and I will talk to you again tomorrow.